Welcome to the Conquer Risk podcast. My name is Jeff Goodnow, the Director of Client Education, and my business partner, Manish Kata, is here. He's the President and Portfolio Manager of Potomac Fund Management. With this podcast, this is our very first episode, we're going to reach a number of topics, things like conferences that we attend, whether they be business conferences, platform conferences, other firms. We're a third-party manager, so we have a different take on the business, our industry, and we'll hit a lot of subjects through the life of this podcast. So one of the things that we're going to start with is the Envestnet Conference. Manish and I both attended recently, and we thought it might be a good insight to see our perspective on attending that conference. Manish, your initial thoughts?
Well, first and foremost, why are we doing a podcast?
That's a great question, because we like pain, agony, and extra work. That's it.
Yeah, it's been sort of a pain, but I think we talked to each other enough that we figured we'd get our thoughts on camera, on audio, and go from there. So, yeah, definitely with the Envestnet Conference, that was in Austin in May. And for those of you who don't know, Envestnet is a UMA platform that essentially aggregates managers across the board. And so it was a massive conference, 2,000 people attending, some advisors, some broker-dealer home office folks. So it was easy to get lost, that's for sure. Just walking around the massive conference room, it was overwhelming to say the least. What are your 2 cents?
Yeah, I was surprised there were a lot more vendors there than I expected. I really thought it was more oriented around having advisors there, and I mean, frankly, I was just a little bit disappointed. It was probably a 50-50 mix. I mean, so not that there weren't a lot of advisors, but I think that's something that, I would recommend if you use the Envestnet platform or some other platform that you do attend a conference that they have at least once. I think it is good insight just to get, again, that vendor interaction. Whether you use those managers or not, I think it's good to open your eyes and always keep the door open to other thoughts. Right? The phrase you get mad at me for using all the time is you don't know what you don't know. But ultimately, that's what you end up with. And so I think it's a good eye-opener. And hearing
I did have a bet with myself how long it would take before you would say that. So
what can I say?
Well, listen, so your background as, working at head of advisory at your former role, in terms of a UMA platform and managers kind of set up like that, what's your hot take on sort of that concept?
Yeah, so here's what I have learned. Number one, platform users in general are a completely different audience than those that go direct to a manager. Typically, anyway, that's the case. And the number one reason that I see as I talk to them, in my experience, is they've done it because it's simple in their mind, right? And what I mean by that is just that they are tired of having money in 5 different places, right? So they can go to one shop, Envestnet, Adhesion Wealth, whatever the platform is, or they can go to one place, get access to 50, 100, 500, 1,000 managers, and sort of the mindset is, now the paperwork is the same every time, the client experience as far as the statements or reports is the same every time, no matter what manager combination, and that just simplifies their life. So that, there are other struggles, but that's the mindset or the reason that most are there.
Well, from our perspective, we've been recently launched on a couple of platforms, and, the relationship side of it just isn't there, right? We had some money come in, and frankly, we don't even know who it is. And that's something that both of us have to sort of get our hands around and try to figure out, right? Because in the past, it's always been, your client, your advisor, you walk them through the process, how we manage money, things like that. In this sort of new world, we're almost like a mutual fund in the sense where the money comes in. It's actually worse than a mutual fund because at least the mutual fund knows who's investing. We have no idea. It's just a number on a screen. And so it's really hard to set expectations because, if anything happens in terms of, the market or how we manage money, there is no expectations being set in terms of patience and different market cycles. You're managing a number, and the advisor's just judging you on performance. And maybe that's how it's going to be going forward. That's sort of the downside there, is there's no interaction whatsoever. And honestly, that's how the conference was sort of set up, right? It wasn't where you could sit in a room and talk to people and create a relationship. It was sort of herding cattle into different rooms, and every meal was with some new person that you've never met before, and so it is what it is. It has its pros and cons for sure, and it was definitely worth going to for at least for us, right? We some good exposure and talk to some advisors and learn about it because it's so huge, and just the different iterations of where you're available and things like that. It was a lot to take in.
I would agree. I mean, it was a little bit overwhelming just because of the size. I mean, that's just frankly, it's a lot of people to be moving around. But you hit on the number one spot, right? So the number one positive, or the reason that people go, is the simplification. But I think it's important to also understand, and look, everybody does things differently. But when you eliminate a lot of the manager interaction, or the ability to get information from that manager, and you limit your selections to choosing a couple of filters, clicking a button and saying who's at the top, what you end up with is what we've been told by the regulators to never do, right? Past performance is no guarantee of future success. And so that's one of the drawbacks. If you're only selecting managers from that performance ticket, then you haven't necessarily done what I spent over a decade doing, which is really doing due diligence on managers. I mean, I've done that with 400 or 500 managers in my former role.
Well,
so
I think they're assuming that the broker dealer or Envestnet's doing the due diligence, and in some cases they are, but that's not the same as picking up the phone and talking to them. But listen, we talked about this the other day with Microsoft, right? We use Microsoft Teams, we use Outlook, and would it be awesome to also use SharePoint and have her server in the same place? Of course, you know how cool it would be to be able to toggle back and forth. But then at the same time, everything is with Microsoft, and anything happens customer service wise. I don't know if anyone has ever tried to call them, but it's not fun. And so you run the risk when you have everything in one place. Of course, it might be convenient and it might be easy until something goes wrong or until you need something, and then you're calling sort of the mothership to get anything accomplished. So that's ultimately the decision that each person has to make.
Right, and that's the end result, right? Ultimately, there is no silver bullet, right? I mean, you can go direct. That's a higher cost. It's a higher service level, or you can go to a platform, which is a slightly lower cost. But the service level now is not with the managers don't have any say in it, right? I mean, our experience, right?
I'm not convinced it's lower cost. I just think someone else's hand is in the pot.
Right. Well, notice I said slightly lower.
Yeah.
It's not necessarily a big savings in most cases, but to each his own, right? Everybody's got to make their own business decisions and take that sort of action. So it's just a lower engagement space, and that's something that that's part of a lot of my conversations were actually with other managers, because I wanted to get an understanding now that we're doing this for the first time in 30 years that, okay, so what is the experience? What are your, what have you learned? What did you not know, right? That's
just manage money and shut up.
Yeah, pretty much. Yeah. That's what we do, right? We send the trade signals and our hands are clean, and there's not a lot of service we can do even if you call us, because again, in some of these cases, some of the platforms, we do not even know who it is that's using us. So yeah. Anyway, that's the scoop on Envestnet and that particular conference. So overall, I think it was definitely a plus. I'm excited that we're available on these platforms because, again, it's a different audience. So we can bring our extended experience of risk management to other platforms, other
yeah, and then we're being on Adhesion and looking at SmartX and the whole boatload. They all have their different sort of pros and cons, and right. Just trying to open up avenues here. So yeah, overall, I think it was a good experience.
Yeah, I think to sort of complete the circle, the one thing that is key is because we don't have the direct interaction. That is one of the things that led us to doing the podcast, right? So we have a blog, we do some videos, we do a lot of stuff on LinkedIn, and we're writing a monthly commentary for the active advisors that get that, right? And so the podcast was sort of that next iteration. What else can we do to provide content to people who want to engage with us but don't necessarily have that direct connection? And so here we go.
And hopefully
podcast number one.
And hopefully it's just not a turnoff to them too.
Yeah. Well, yeah. Who knows? I mean, I could be prettier for sure.
Time will tell.
All right. What's next on the list, Manish?
Well, what I was working on lately, in the news, there's tons of talk on the 200-day moving average. That keeps coming up if you do watch financial news. And so I said, all right, let me actually go back and test this and see if there's any validity to it. So I went back and ran some sort of projections back test based on what would happen end of day if you bought and sold anytime the S&P went above and below its 200-day moving average. Does this sort of methodology or trading strategy make sense? And interestingly enough, over long periods of time that have bear markets, you do definitely reduce the risk. The drawdown over a longer period of time is almost 50% less than the S&P. But in periods of time where there's no volatility, of course, you really lag the performance on the upside of the S&P 500. And so some key takeaways, it's all in the eye of the beholder. If you want risk management, something like a 200-day moving average, which is nothing more than a 10-month trend indicator, can make sense. Can you, as an individual advisor or even client, execute that perfectly? Probably not, right? Because you have to sit there and make sure that you're available to execute that trade. There's no fees or taxes or anything like that included in it. So it was just a basic calculation to say, does a strategy like this make sense? I think it makes sense to reduce risk. I think it's almost impossible to execute as an individual or even an advisor that doesn't have the infrastructure in place. But it was interesting enough to see the results, and it definitely does reduce risk. And if that's your goal, I'm always for any tool versus nothing and just sort of flying by the seat of your pants, because in that case a lot of times you execute risk management strategies after the fact. In 2009, after you have the washout. So I'm going to test some other things. What if you waited 5 days after it crossed the 200-day moving average? What if you put bands on it? For example, if you went 1% above or below or 2% above below, can you somehow get rid of whipsaw trades, produce better returns? I just want to test it for shits and giggles and see kind of what the results are. But I know from doing this that ultimately you're going to reduce risk and you'll probably trail a little bit on the upside. But that's okay because you're doing it to reduce risk, which will frankly take away some return.
Right. Well, I think that's really the moniker, right? It's a tool to reduce risk, and is it perfect? No, but what we've seen in our industry over and over again, and I'm really excited because I would say in the last 5 years it's become much more prominent. The behavioral side of the equation is coming to the forefront, right? And what that means is, look, you can have all the great returns in the world, but if you also have a massive amount of risk, it's not about the clients getting to their goal. It's about the client staying engaged to get to their goal. I mean, that's right. That's half the problem is getting them to fire you.
It's like working out. It's like working out, right? The best workout and diet, probably shouldn't take advice from too chunky people, but the best workout and diet is the one you can stick with. Right. And right. So same with investment strategy, passive and risk management, tactical. It doesn't matter. If you can stick with it, it'll work long term. But if you're going to bail at the first sight of a drawdown or the first sight of underperformance, to your point, behaviorally, nothing will work.
Well, and that's part of the reason that it makes sense to do some of both, right? I mean, people talk about diversification for years, and there's all kinds of studies, the Brinson B. Bauer, blah, 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 right, about diversification. The problem is diversification at the time that it's done maybe makes sense, but again, it's all about keeping the people engaged. So if you've got if you diversify strategies a little bit, then maybe that makes sense. You have some strategic passive stuff. You have some tactical stuff. It's a better way to get people to stay engaged in the overall process because, look, the odds of both of them just firing on all cylinders at all times is not likely going to happen, right? Again, there's no silver bullet. But if it keeps them engaged to the point where they stay on the path, and again, you have the behavioral coming to the forefront and you have financial coaching and planning coming to the forefront. These are such bigger topics, I think, than just, what's my manager done for me lately? It's a good thing overall for the industry, and therefore
you're wrong. Just buy a passive fund and do nothing. I mean, that's the key to financial freedom, and just cross your fingers and hope you don't do it before a massive decline. We've said this for years. All investment strategies over time work as long as they fit your risk profile and you're willing to stick through it. Yeah. If you're not, don't do it. And I just highly doubt that most people are able to stick through massive declines. And so we'll see.
Right. Well, we saw this, right? We saw this during the last iteration, right? Everybody's risk was way up here, and then shit hit the fan, and suddenly they're like, "Well, I didn't want to lose that much money." And so, it is what it is. I mean,
Yeah,
people's
that's
risk parameters change based on the environment they're in. And if you don't understand that, you're missing the boat. So you have to, as an advisor, realize that when markets are flying like they have been for the last 10 years, this historic bull run.
wait.
everybody's
Are you
risk will be
saying
up.
are you saying that you have to conquer risk?
No, I would never. Well, maybe 10 minutes ago. I would
All right,
never
let's
say
move on.
conquer
Let's
risk.
move on.
All
Let's
right.
move on. We're beating this. All right. Recommendations. I saw a Netflix documentary called Gringo, which is on John McAfee. And it was interesting to me because I was in Belize and I had about 500 no-see-um bites on my leg. And I'm driving or taking the boat taxi into town, and this guy sits next to me, introduces himself as John McAfee, and proceeds to tell me exactly who he is. Have you heard of the software, the antivirus? I'm that guy. Which was strange off the bat. He was batshit crazy from the jump. Proceeded to tell me and spray some stuff on my leg that was some holistic, homemade, whatever the hell medicine. Get off the boat. There's a local bar in there, invites us in for a drink. I don't know why I accepted. I did. And the craziness just continued. I had no idea, what was to follow. Obviously, no one did. So the documentary was actually entertaining for that because I kind of had a background on him. And it's worth watching. I mean, the guy, you can say he's brilliant, but the documentary really paints the picture of him just being a nutcase and a charlatan. But either way, I think it's worth the watch for a Sunday night. What do you got?
Yeah, I'll have to take you up on that because I've seen a couple of smaller interviews and so forth, and you're right, he's flipping nuts. So it's like watching a train wreck. You just can't not. So I'll have to go check out Gringo. The thing that I caught the other night, Kim and I watched Handmaid's Tale, the first episode. And I know that's been out for a while. It's won a bunch of awards, but we thought we'd try something a little bit different. And I got to say, it's very slow intro. You got to be willing to put up through an hour of
Listen,
of
these
slowness.
recommendations are serious. Should I start it or not?
I'm going to say start it. I'm ready for number
Uh-oh.
2 as fast as I can, but it's intriguing because in a nutshell, you get this alter society right after things have kind of gone to hell in a handbasket, and it's a real reversion. And in this reversion, it starts by letting you into the inside of the inner thoughts of the handmaid, all right, the primary character. And that's pretty cool because on one hand, everything is very closed, very conservative, all these rules, and you hear her right out of the gate, saying, I'm going batshit crazy, or whatever the case, right? I mean, it's language like you would expect to see when you're stuck. You can't get out of this mess, and you're trying. Your brain's going 100 miles an hour. So it's really weird, the contradiction, and I found it very intriguing. So I'm gonna shoot for number 2. I'm gonna give it another whirl and watch the next episode. But yeah, it's completely different than anything I've seen before. So
Fair enough. What else? Anything else going on?
Well, one of the things, ultimately, so we are in Hutchinson, Kansas right now, right? My wife and I full-time RV. And so one of the things that I think is good as a takeaway, we've had to try as we started this full-time process, internet, right? Internet's a toughie. And so one of the things people talk about cutting the cord, and I heard this on a podcast the other day, well, you can't really cut the cord when you live in a home because you've got to have internet, right? You still have to get your
it's impossible.
Zulu,
You're still getting it from
your
someone.
Prime, all
Yeah.
your stuff. Well, the reality is one of the tools that we've tried the Verizon MiFi, which was a plan that was unlimited data, truly unlimited data. You get deprioritized though. But what we found that we also wanted to have some sort of an ATT backbone. And AT&T wasn't offering a great deal, but a company called OTR Mobile, otrmobile.com, basically on the road, right?
Yeah.
They offered a deal where it was no deprioritization. Boy, I can't even say that today. And unlimited, and I got to say, it works phenomenal. It's really, really good. So obviously, we have to have the right enough signal to get the cellular. But if we do, and I've got a booster out back,
And so it's better than just hotspotting.
It's
just hotspotting your phone.
Don't hotspot your phone, man. You run through data so fast. You watch Handmaid's Tale, you're going to go through about 15% of your 15% of your data. So
you have unlimited.
That's why I wish, right? We're in an industry where everything is regulated and you have to be careful what you say. But think about this. The cellular industries all get to say they have all these unlimited plans. And then you read the fine print, all the disclosure, and you say, well, unlimited goes to 15 gigabytes on a phone or 20 gigabytes on an iPad, those sorts of things.
Are you saying that cellular companies are full of shit?
Yes, sir. They are full of shit.
I don't think you're the first one to come up with that.
The fact that it's unlimited, and then this OTR mobile device is actually unlimited. I mean, I'm streaming all kinds of stuff and running work through it all day long. That's what we're using right now, streaming that. So, it's a pretty cool gig, and I just think as a takeaway, right, if you're thinking about cutting the cord, this is a way to cut the cord because you can have all of the access to everything that you normally have, I mean, within reason, anywhere you want. So if you go on vacation, hit the road, go on a business trip, fine.
Yeah, but AT&T has to be a strong provider in your area, or this doesn't work either.
They do.
Yeah.
They do. And that's part of the reason so this is a separate niche, right? Full-time RVing. That's why we have a full-time Verizon hotspot, that MiFi is what they call it, and the Nighthawk from AT&T, because we wanted two different cellular signals. That way we have better odds of having one or the other, and we can
and
both
5G will solve all this as well whenever the hell that comes out.
And then both of these tools then go out the window because they're 4G.
Okay. All right. What else? I think is that it for this week then?
Yeah, I think that'll do it for this week. Ultimately, we appreciate if you like, subscribe, dance to your own beat, share with your friends. Shoot us a note. Go out to potomacfund.com, and you'll see the list of this podcast as well as the others that we do along the way. Let us know what topics that you want to see, what you want to hear, what we can touch on or approach, what it's like to run an RIA, etc.
You're forcing my hand to turn on the comment feature on the blog.
Oh, well, it's a dirty job.
All right, well, you can like and comment on YouTube. We'll put it up there, and they can like and comment there. I got to keep it off on that. So, all right, fair enough. Then we're going to try to do this weekly. We'll see. Hopefully we're in the same state, country, Wi-Fi, something, so we can do this. Otherwise, we'll do what we can. But until then, thanks for listening.
Adios.